Now that we have the expected cost of our three inventoriable cost components, direct materials, direct labor, and manufacturing overhead, we can prepare a budget which is going to figure out exactly what amount of cost of goods sold Van Cleaning can expect to report on its income statement at the end of the period. And to begin to do this, we need to figure out what amount of cost of goods sold are we going to be able to record per unit, per bottle. What is our cost in total to produce one bottle of this all-purpose cleaner? Well, that can be found by summing up your direct material cost per bottle, your direct labor cost per bottle, and your manufacturing overhead cost per bottle. So for our direct materials cost per bottle, let's go back briefly and reference our direct materials budget. Our direct materials budget told us that we are proposing that each bottle we make is going to take 2 pounds of direct materials, and each pound is going to cost us $1 a piece. Well, if it takes 2 pounds per bottle at a rate of $1 per pound, that means that the total direct material cost to produce one bottle is going to be $2. So our direct material cost per bottle is $2. For direct labor, we can go back and reference our direct labor budget. In our direct labor budget, it says that each bottle that we make takes about 1/10 of an hour. And then we pay our employees $20 per hour. Well, just like we did with direct materials, where we multiplied the quantity times the rate, we're going to do the same here. If it's taking 1/10 of an hour to produce each bottle, and we're paying our employees $20 per hour, 1/10 of 20 is $2. So we're paying $2 in labor costs for each bottle that we produce. And then lastly, we have our manufacturing overhead cost per bottle, which we can go back to our manufacturing overhead budget to reference. And if we go to our manufacturing overhead budget, we've already determined that the budgeted manufacturing overhead per bottle is going to be $2.30. So in total, each bottle of this all-purpose cleaner that Mad Cleaning is going to produce is going to cost them $2 in direct materials to make, $2 in labor costs to convert to a finished product, and they're going to incur $2.30 in overhead for each bottle that they manufacture. And in total, that's going to come out to $6.30, how much they're paying to produce any one given bottle of this all-purpose cleaner during the period. Well, that's how much we're paying to make units now. And if we have units that were made in the past, maybe they didn't cost the same exact amount to make back then. I mean, the price of things is always changing. So we need to go and check our beginning finished goods or sellable inventory when the period begins. And our finished goods and beginning inventory, according to our information, is as such. We had 1,000 bottles in beginning inventory, and each one of those, just like the ones we're making this period, cost us $6.30 to produce, which means the total cost that we paid for those finished units that we are starting the month of January 20XX with was $6,300. So for our cost of goods sold budget for the period, we need to figure out what amount of costs we're going to be able to expense as a cost of goods sold from units sold from beginning inventory, and what amount of cost of goods sold are we going to be able to expense for units which we both produced and sold during the period. Well, let's start with our beginning inventory. We're starting with 1,000 units in beginning inventory. And each one of those costs us $6.30 to produce. Assuming we are a FIFO company and we sell our oldest inventory first, that means that to get to the 10,000 bottles we're proposing that we're going to sell during the period, according to our sales budget, we're going to have to sell all 1,000 of those units which were in beginning inventory, which we paid $6.30 a piece for, meaning we're going to get to expense $6,300 of manufacturing costs for the units that we had in beginning inventory, which we're going to sell during January of 20XX. And how about our units produced and sold during the quarter? Well, first let's figure out how many units are going to be produced and sold during this month. Well, going back to our sales budget, we are proposing here that we are going to sell 10,000 units during the period. Going back to our cost of goods sold budget, we see that if we're selling 10,000 and 1,000 of those are coming from beginning finished goods, that means that 9,000 units, I don't know what just happened there, have to be coming from the units that we produced and sold during this period. So we're selling 9,000 units that we made during January. Well, how much are we paying to manufacture any one bottle during this month? The same $630. So those 9,000 units which we're producing and selling during this period, costing us $6.30 a piece, means that we are going to get to expense $56,700 worth of manufacturing cost as a cost of goods sold for the units that we sell during the period, which were also produced during the period. And in total, when we add these two together, we're expensing $6,300 from beginning inventory and $56,700 from this current period. Our budgeted monthly cost of goods sold is going to be $63,000.